you've made it to the last learning objective of chapter 1. Good for you. I know it's a lot of information. I know it can feel very, very overwhelming. This first chapter is a big, broad overview, but I promise we're going to go back. We're going to pick up with chapter 2, and we're going to talk about each of these things that we've talked about in more detail. And we just keep building on this foundation. But good for you for keeping up to this point. So this very last objective is we're going to look very, very, very briefly at the 4 main financial statements. So we have again, companies produce what we call these annual reports. They're called annual reports because they're produced once a year. If we were sitting in a classroom, I would have brought several and I would have passed them out by now. As it is, I'm going to email you some links to some, and I encourage you to go to company websites, basically any large company. Usually if you scroll all the way down to the bottom of their website, there's usually a link called Investor Relations, and you can click on that and you can review their annual report. Now, their annual report has lots of different stuff in it, but one of the things that is in it is the financial statements, and that's the part of the annual report that we, the accountants, are charged with preparing. This is how we communicate all of these financial information, all of these results of operations to our owners. And there's 4 basic financial statements that get put in that annual report, and so we're going to very, very briefly walk through these. By the end of the semester, you'll be able to produce quite detailed financial statements for all 4 of these statements, but these are just very, very simple ones to start with. So again, as I mentioned, there's 4 financial statements. The statement of income, or the income statement. You'll also hear this called a profit and loss statement. It's going to show our net income or our profit for a period of time. Next comes the statement of retained earnings. You may also hear this called a statement of equity, statement of owner's equity. So some of them do a little more complex. We're going to be looking at a very simple one. And this is really just looking at that statement of retained earnings and what caused changes in it. Then we're going to look at the balance sheet. The balance sheet mimics the accounting equation, so it lists our assets, our liabilities, and our stockholders' equity. And then lastly, we're going to look at the statement of cash flows, and we'll talk about that one again more in a minute. Now, when you're looking at an annual report, you may see that companies may list their financial statements in a different order, but as we're going to find out, they have to be prepared in this order. So you have to do the income statement first, then the retained earnings, then the balance sheet, then the statement of cash flows. They have to go in that particular order. So the income statement, this is again a very, very simple income statement for Smart Touch Learning, just for their first month of operation, so haven't done a whole lot yet, but there's some key things that I want to point out on this income statement. First of all, you'll notice that all of our financial statements start with a 3-line heading. This is customary. The 3-line heading is, the first line is always the name of the statement. The first line is always the name of the company. The second line is always the name of the statement. And then the third line is the date of the statement. Now, all income statements are for a period of time. So this one says the month ended November 30th, 2024. So we can assume that it's from November 1 to November 30th. Sometimes it may say the quarter ended or the year ended, but regardless, the income statement always covers a period of time. Now, on the simple income statements, there's really just 2 basic things that are listed: revenues and expenses. We're going to list our revenues first, then we list our expenses second. Now, you'll notice that they use columns in the financial statements. The columns are purely for organizational purposes only. So typically, this second column, this column over here, this is for totals. And again, y'all know I have a hard time writing with my mouse here. This is for totals. So since we only had one kind of revenue, we only had service revenue, that's the total revenue. So we just put it in the second column. We're going to get though where we have multiple kinds of revenue. Maybe we provide services, but we also sell goods. So we may have two kinds of revenue listed in this first column. So this first column is for those individual amounts. And then we'd put the total in the second column. So here we have our expenses listed. We had two different expenses, so we listed those out individually here in the first column, and then we put the total in the second column. You'll also notice there's a single line here. Anytime we see a single line, we know that a single line means subtotal. So that single line underneath the salary expense tells me I'm going to total all the expenses in this category here, and I put the total in the second column. So now the second column shows me the total revenue and the total expenses. Now I want to make one change here, and if I could write in all of your textbooks, I would. Remember, the income statement is, the formula for the income statement is revenue minus expenses. So while it's not mandatory that this is done, I would encourage you when you're doing this to go ahead and put parentheses around these total expense number. This will remind you that you need to subtract these expenses. Now, again, it's not mandatory that you do that, but I've seen too many times students on tests and assignments, if they don't put those parentheses, they'll forget that they need to subtract total expenses and they'll add, and then that would be wrong. So our net income, or our profit for the month, was $5,300, $8,500 of revenue minus $3,200 of expenses. So now that we've calculated our profit, we're through with our statement. You'll notice that we double underlined at the bottom. Double underlining means you've finished the statement, and that's important. You want to always double underline at the bottom. The other thing I want to point out is the use of dollar signs. You'll notice that they, in the example, they only use dollar signs at the top, the beginning of the statement, and at the bottom. Sometimes you'll see it where they only use them at the bottom. That's just kind of customary. We know that this is dollars. So, and if you were to use dollar signs all the way down, it just gets messy and hard to read. Now, the statement of retained earnings comes next. So you'll notice again, we have our same three-line heading. We have the name of the company, the name of the statement, and the date. Notice that the statement of retained earnings is for a period of time, just like the income statement. In fact, it is for the exact period of time as the income statement. So if the income statement's for a month, the statement of retained earnings is also for that exact same month. So the statement of retained earnings, it starts out with what is the beginning balance in retained earnings. So at the beginning of this period, November 1, the balance in retained earnings was zero because we just started our business on November 1, so we had nothing in savings yet. So it's zero. It will never be zero from here on out. It's only zero in the very first month. So if you're working a homework problem and they tell you it's the first month or the first quarter or the first year, then you know that beginning retained earnings number is zero. Otherwise, it's not going to be zero. So we add to retained earnings our net income. So this $5,300 right here, we just calculated on the income statement. So that comes in to that. So it was the beginning retained earnings plus all the profit that we made. And we're going to see eventually in chapter 4 that we literally take all of that profit and we transfer it into our retained earnings account, which I call our savings account, right? And then we're going to subtract out the dividends. So remember, we paid $5,000 in dividends. Notice those $5,000, that $5,000 is in parentheses to remind us to subtract that. So we transferred $5,300 of profit in, then we spent $5,000 on dividends to Sheena Bright, so we're left with an ending balance of $300. And notice again that we've double underlined and put our dollar sign here at the end. So this is as complicated as this particular statement is going to get for us in this class. The income statement's going to get more complicated than what we saw in the last slide, but this one is really just going to be this simple format, beginning retained earnings plus net income minus dividends. Now let me say something. Remember, I mentioned this in the last objective in the last video. Corporations are not required to pay dividends. Some do, some don't. So if you're working a homework problem and there are no dividends, then you just didn't pay dividends in that month or quarter or year, and so you just don't have anything there. Then it's just beginning retained earnings plus net income, and that gives you your ending balance. So if you don't have dividends, don't stress. We don't always pay dividends. So then we get to the balance sheet. This again is that accounting equation, assets are equal to liabilities plus equity. Notice again, we start off with our same three-line heading, name of the company, name of the statement, and then the date. But notice the date. The date for the balance sheet is not for a period of time. The date is for 1 day and 1 day only. Specifically, it's close of business on November 30th, 2020. So that's really important. You want to jot that down in your notes. It's for 1 day and 1 day only. And if you think about it, that makes sense. Remember, cash is an asset. And if I were to ask you, how much money do you have? Like, how much cash do you have? You would tell me, like, right now, I have X number of dollars. You wouldn't say, over the last month, I've had this much money, right? It's a right now statement. It's often called a financial snapshot, okay? So we can do our balance sheet in kind of these columns like this. It's called the columnar format. You can do them, especially if you're writing on paper. You may choose to just go down a sheet. Think of it if your paper's portrait versus landscape. You may just go down the sheet vertically. That's called the report format. Perfectly fine. Either way is acceptable. Since we've got these in two columns, our column on the left is the assets. You'll notice that we've listed all of our assets. We've listed our cash, our accounts receivable, our office supplies, our land, and we add them all up. We're going to learn in Chapter 3 that assets are listed in a particular order. For right now, all you need to know is that cash is always the first asset listed. Always, 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 you're going to list cash first. We'll talk about the rest of the order later. So then on the right side, we've listed our liabilities. We only had one liability, so that really was the total. But if we had multiple liabilities, we'd list them all out and we'd add them up and we'd say total liabilities. And then we listed our stockholders' equity. Now remember, there's only two parts of stockholders' equity. It's contributed capital, which again, for our purposes is common stock for right now until we get to Chapter 13, and retained earnings. This retained earnings number came directly off that statement of retained earnings that we just did on the last slide. So common stock plus retained earnings gives us our total stockholders' equity. Then we add that with our total liabilities. And so we get total liabilities of $30,500, total assets of $30,500. Since the balance sheet balances, we want to double underline. Now, again, I want to point out the balance sheet always, always, always has to balance. There will never, ever, ever be a situation where the balance sheet is correct and doesn't balance. And I say this because every once in a while I'll get students in class who like to tell me, well, in the real world, the balance sheet doesn't always balance. And I'm like, in the real world, it better balance or you're probably going to prison. So it really does have to always balance. Now we're going to spend most of the semester focusing on these first three financial statements. Not until the very, very, very end of the semester when we get to Chapter 14 are we going to talk about the last financial statement, the statement of cash flows. So for right now, all I want you to know is that the statement of cash flows is the fourth statement. And we're going to get to it at the end of the semester. We're not going to do anything with it until we get to the end of the semester. The statement of cash flows measures how much cash we received and what we spent cash on during the year. So it's but it's different than the income statement. Notice that it has the same 3-line heading. Notice that it's for a period of time, just like the income statement and the statement of retained earnings. But I'm not going to expect you to do anything else with the statement of cash flows until we get to chapter 14 at the very, very end. Great job on chapter 1. Again, I know it's a lot of information, and if you feel just kind of completely overwhelmed, that's totally normal. Stick with it. Read the textbook. It's so important that you read the book. Take your notes. If you need to go back over them, you can go back through these videos. Work through the homeworks in my accounting lab. Shoot me an email, post in the discussion board. We can set up Zoom sessions to talk about some of these things, but stick with it. I promise we're going to pick up in chapter 2, and we're going to go back over these same concepts in more detail, and we're just going to keep plugging away at it. But you've done a great job, and keep up.